Jose Vinals, Financial Counselor of the IMF. Is global financial stability improving?
Global financial stability has been improving recently, but the global financial outlook remains uncertain and subject to downside risks. I think that the most important thing is that confidence, although it has improved in recent months after the very decisive policy actions that were taken, particularly in Europe in May and later on in July, but confidence is not yet fully back. And one can say that the financial system remains the Achilles heel of the global economic recovery. And that is because there are two vulnerabilities that need to be addressed: high public debt levels in many advanced countries, and then vulnerabilities and fragilities in the banking system still in a number of countries as a result of the crisis.
So what should be the main policy priorities in the advanced economies?
I think that the top policy priorities for advanced countries are mainly four. First, they should tackle the problem of high public debt by putting in place credible medium-term fiscal consolidation strategies. Second, they should address the remaining vulnerabilities in the banking systems, and they should resolve and restructure weak banks in order to provide their national banking systems with enough capital and liquidity to be able to support the economic recovery. Third, progress on the regulatory reform front should continue advancing, and we should move definitely to a financial system which is much safer than the one that we had until now. And lastly, regarding exit strategies, central banks and governments should be ready to provide as much support as needed to the financial systems if the situation requires it going forward.
What should be the policy priorities in emerging countries?
I think that the main challenges for emerging markets very much depend on their initial situation. There are emerging markets, like in some countries in Central and Eastern Europe, that were hit by the crisis and which still need to do a lot in terms of macroeconomic policy, particularly fiscal policy, and in terms of the repair of their financial systems to fully restore and maintain financial stability. And then you have other emerging markets, like in Latin America and Asia, which are receiving very large amounts of portfolio capital inflows due to the fact that these countries offer attractive returns, have good growth prospects, and have also good public finance fundamentals. So these countries need to be prepared to deal with the macroeconomic and financial stability challenges posed by these inflows, by appropriate macroeconomic policies, by appropriate policies to underpin financial stability, and because these capital inflows may be persisting over the medium term, given that these countries have such good prospects, it will be very important that they continue working to develop the local financial markets to safely intermediate all of these inflows which are likely to be coming in the future.
Jose Vinals, thank you.
You're welcome.